Hello, I'm Clifford Bennett from Hurston Economics. Quick market update for today. Clearly the floods are going to dominate everyone's thinking to a degree. Overall though, markets, commodity markets, equity markets are looking good as we thought they would be as the week went on. We expect that energy to the upside in commodities, gold, oil, and equity markets in general, including the Australian equity market, to firm up as the week goes on. The market that's really feeling the pain, if you like, of the floods at the moment is the Australian dollar, the currency market. There is a chance that we could get quite a fast move to the downside as people, particularly American traders, are very familiar with their experience of what happened in New Orleans, and that might force them to sort of feel like they'll get out of the Australian dollar for a little while. Other people holding Australian dollar positions will start to wonder if they should hold for the moment, given that there is going to be that selling pressure. They may all decide to sell as well, and then you have nothing but sellers. At that point, the Aussie could be falling quite quickly towards 97.5 cents, and I would expect the Reserve Bank would step in at that point to smooth the market and calm the market down. That's the worst case scenario. Probably we are going to head down towards 97.70, 97.50, but hopefully in a relatively orderly way. The Reserve Bank this morning has suggested that the floods could in fact take up to 1% off GDP this year. So clearly they are on hold until at least the second half of the year. There's even a chance the Reserve Bank may have to cut rates before year end if the economy in Queensland doesn't recover as quickly as people hope. There's no doubt that what's happened in Queensland is a game changer as far as monetary policy is concerned. It's also a bit of a game changer in terms of the outlook for GDP growth. As I mentioned, at Hurston Economics, we think it will take about 0.7% off GDP growth this year. The economy in the domestic sector in particular wasn't too bright in the first place, so this further, just adds further to those downside risks that the Reserve Bank has to be increasingly aware of. Equity markets, we said we liked oil stocks, we like gold. Those markets are looking good, and I expect gold will kick on a lot higher. Oil will as well over the next 24 hours. And I think the Australian equity market will surprise people and start to glide to the upside a fair bit as the day progresses. The sort of inflow from overseas is quite good. And as I suggested yesterday, the whole furor and fear over Europe has been badly sort of exaggerated, and we're going to see continued good supply of funds to those European markets. Overnight we saw Greece and Italy both have their issuance of paper go extremely well. Several $1 billion invested there by bond investors who are quite happy about the outlook for Greece and Italy. So none of those fears that were there at the end of last week or on Monday about the European situation have been validated, and we continue to see that as a bit of a storm in a salad really, and markets are going to consolidate here and move quite higher. I'm looking for the market to accelerate quite quickly in the next day or two to the upside. The Australian dollar is the one market to be a bit wary of.